options. So what we're going to talk about tonight is A, our week. How are we doing so far this week? B, we're going to go through what I said last Sunday night. We go live every Thursday night and Sunday night. Sunday night's the beginning of the new work week when the futures open. So I mentioned what my concerns were about the market going into the new trading week. We're going to follow up. We're going to say, okay, was you right on that concern? And one thing I need to pose is that we're going to be reviewing weekly charts. One trading day left to go. A lot can happen on Friday. Tomorrow is options expiration day. So remember that. It's going to be very, very volatile day. Traditionally, August monthly options expiration is very volatile. There's no real trend, bullish, bearish. It's just chop. So buckle up. Good trading day tomorrow. Maybe we'll get some volatility that rises and we could trade some options. What else? We're going to go over Apple. Why are we short Apple this week? We're also going to talk about the news events, things that are going to drive inflation up higher. Yet again, I began talking about it on Sunday night. I was talking about hedging last Thursday night. We are even more hedged now to defend against a downside move than we were last Thursday. And by and large, the markets really haven't changed. So what we're seeing is a stalling out. So while we wait for people to populate in here, I want to tackle something. Yes, I am wearing my Gringo shirt. So if you're out there and you're one of these guys, this stream, the people that join in on this stream are, my demographics are by and large 95% mad lad, high testosterone men. We have a few women, ladies that join in. They're very good traders. We love to have them. We welcome more females to to lighten up all the testosterone that comes onto this channel. But every once in a while, we get one of these guys that comes in and gets offended by what I say, what I wear. This is a Gringo shirt. I made it up. I had it made. And before you go get defensive, there's a story behind it. It goes back to, I think it's A Fistful of Dollars. Eli Wallach and Clint Eastwood, I believe it was 1964. Great movie. Go check it out. That's where I got the word gringo stuck in my head. And the actual, to clarify what a gringo is this. This is so I don't get demonetized on YouTube. A gringo, in Spanish-speaking countries and contexts, chiefly in the Americas, a person, especially an American, who is not Hispanic or Latino. I think I qualify, okay? And this I didn't know. But I learned this tonight. The story goes that the U.S. military greencoats, when they were marching through Mexican territories, in response to the Mexicans would say, go green, go home. Never knew that. See, this is why you join in here. It's a family-friendly show. We're not just talking about money. We're talking about history. So I doubt many people knew that. I certainly didn't. I'm a student of history. So there we go. These words meshed together, and the word gringo was born. Gringo. All right, let's get to it. Let's say hello to people before we begin. Let me share my screen. And because I always forget, and I get reminded. All right, let's do this. Let's say hello to people. Seymour Rivers. Hope you're well. I'm looking forward to tonight's episode. I am too. Seymour, you were talking about a trade the other day. I was thinking about you. What was that trade you were talking about? I got 1 second, folks. I got to get. Oh, I didn't send out the. That's why I forgot to send out the link. That's why there's so few people tonight. I screwed up. I was wondering why there were so few people on tonight. I didn't send out the link. Oh, how embarrassing. They'll find it, though. I'm so bad. Let me put this out there. Oh boy. All right, good. There we go. Okay. So Seymour, share that trade again because I was thinking about you. I forget what it was, but I thought about you. Pete, hello, Pete. Isaac, hello. Sorry, guys, I forgot about sending out the email invite. Larry, weekly S&P chart shows volume trending down as price moves higher. Red flag. And I think we've been kind of touching upon that, Larry, since I think it was last Thursday. We started putting on hedges to the downside. So it's point well taken. We're going to go over how far we've come since the lows of June and the whys behind why we're not. I'm not getting short the market, Larry. You know this. We chat all the time. But for the benefit of everyone out there, we're not getting short the market with a bet that there's going to be a crash tomorrow. We have a very large position out there at any given time where we're underwriting a bunch of options, and I'm responsible to accept that risk. It's an undefined risk. It's really not acceptable for a market to go running up 25, 30% within, a month and a half to not expect a counter trend move to the downside, if not to new lower lows, without having some sort of a hedge. So we need to do that. It makes sense. So we'll continue to do that. But we're going to go over the weekly chart in a moment, Larry. Thanks, Alan. Yeah, the story behind it. I like your shirt. It looks fresh and quick. Yeah, it is. So I was down in I was down visiting my brother down in Florida, and I had to go buy a new phone. So I said, I'm in this mall down there. My phone blew up on me. So I had time to kill. They're programming my phone. I was transferring stuff up to the cloud and transferring it back down. It was like an hour, easy hour. So I go into this customized T-shirt shop, and I bought a couple of shirts, had them customized. And this one here, I always wanted because of Good, the Bad, and the Ugly. And as a matter of fact, there were a couple of movies where Eli Wallach was in with Clint Eastwood, and he always called him Gringo or Blondie. So I always loved that pair. And so the guy that was making up the shirts, he's like, he's kind of cringing. He's like, "You worried about doing this?" I said, "No, not really. I knew what the definition was." And so there was a Spanish lady that was in the store. She spoke not a word of English. I asked her, I would use Google Translate on the phone. I said, "Do you find the word gringo, do you find it offensive?" And she replies back through Google Translate, "No, I call my son gringo. He was born here in the United States. It's a term of affection." So that's why I got it, So that's the story behind it. Okay. Educational history and stock coverage. Yes, man. You're awesome. You're awesome, man. Thank you. Yeah. Thank you for that. We're going to go over SQQQ. Yes, that's exactly right. I have a special chart I want to go over for the SQQQ. Seymour, if I don't remember, remind me, please. I'm going to write it down. All right, cool. Lights, camera, no teleprompter. No teleprompter. I have no head. I have no hedge on right now. There is no net below me. So, and when things go wrong, it only happens when I'm live. I would really love to hear about Tesla. We're short of Tesla now, especially with the upcoming split. I think the split is probably the only reason why Tesla hasn't dropped right now. The split means really nothing net in terms of valuation or otherwise. But I think that it's going to be good for liquidity for Tesla. The short squeezes are going to be a lot less squeeziest, if that's a word. I just made it up. The float's going to be larger. So it's going to be an easier stock to trade than what it is right now. I prefer it being up at these high numbers because the options are very expensive. They're very liquid. The options are probably going to get less liquid because the common stock is more affordable once they split. So from my perspective, as a market maker, as a premium writer, I prefer the higher price versus the lower price. But for those with moderate size accounts, small accounts, and they want to buy Tesla, well, then the split's going to help them out. But otherwise, in terms of fundamentals, it makes zero difference. Yoga Mac. Hey, brother. Welcome. Two F-35 just flew over my house, low and slow. God bless America. Amen, brother. Shout out to Yoga. Danny. Hey, Danny, how you doing, pal? Volatile Bob direction square. Let's put that on Wikipedia. All right, let's do it. Let's get to it. All right, we're going to be talking about the weekly charts as we usually do. I want to try to blow through them tonight. I want to go to chart requests. Oh, and a bit of an announcement that is going to be coming out fairly soon for members anyway. Currently, the members forum is on Slack. I'm changing up the business model some, and this has been going on a while. That's why I haven't done any modifications on the website for quite some time. I'm going to be migrating to what you call Mighty Networks, and I've reserved two separate domain names. One is going to be for options. The other is going to be for equities. Members will have access to both of those domains. There'll be private communities for members. But then what I want to do is I want to create a very large equity forum and a very large option forum and create communities around them and build more brand awareness, build more awareness to speculation, in particular options and options writing and short-term swing trading and technical analysis. So for those folks that are, if you're retired or you have time in the daytime, you want to become a moderator, let me know. Send me a DM, whatever. Get in contact with me, and it's going to be rolling out pretty quickly. The members version is coming out pretty soon, but the options version will be out in early 2023 Q1. So a lot happening here. That's why you haven't seen a bunch of new initiatives by me. It's been a lot of behind the scenes stuff. So if you're interested, please let me know. Okay, let's get to it. I want to talk a little bit about, I want to do a refresher. Get rid of this stuff. I want to take you back to this past Sunday night and just walk you through a bit of market prediction for the new trading week. I don't see the setup. So I'm not ready to draw the conclusion that because commodity prices rallied last week, that we're ready to see a considerable move higher in yields, therefore a rollover on equities. Oil prices. Remember, go back to this number. Our esteemed, the venerable commander-in-chief, he said that we have zero. I played the video. Zero CPI for the month of July. How does that change? Well, how it changes is simple. West Texas Intermediate crude. Remember, we have a hurricane coming and 600,000 barrels have just come offline. Back to the chart. We are at the lower band of the declining downtrend channel on crude prices. If we break out and close above $95 a barrel on light sweet crude, guess where we're going? Up. Natural gas. We will be trading natural gas. Members, we're going to be putting on a strangle trade on natural gas using Boyle tomorrow. It's already teed in. I already have it locked into the system. So I'll share that with you later on. Natural gas. Overlaid here with in gray are the peaks in natural gas. We have seen a nice healthy pullback, but folks, this is like a V-shaped recovery for natural gas. So while in late June and into July, natural gas prices, I need more coffee. Natural gas prices saw a decline. Guess where we're at? We're back up to the highs of June of 2013. Guess what's not calculated into this number? The rally back on natural gas. That will be in next month's number. Now, oil prices are still low. Next month's number is referring to the CPI that was released. So I'm referring to CPI. So it's not going to be a shock on the headline. Now, the chart that has me concerned is this one here. I mentioned earlier that the 10-year yield monthly time frame, we have a breakout, but it doesn't necessarily mean we're going to close there. We have several trading days left to go. So we trade the market that we have, not the one we want. So what's the market that we have? Well, this chart here is a weekly chart of the 10-year yield. Last week is now in the books, and we broke out. Not only did we break out, we had pulled back, retested key support, and then rallied off of it to close up on the week. Okay, so I think that's enough. So what we just did is we did a refresh of the sentiment that I had going into the new trading week, that I was concerned about energy prices, because energy prices are going to influence the direction of CPI. CPI is going to influence the direction of yields moving forward. So the question is, what did yields do? Did we get a continuation rally higher this week, or was I wrong? Did oil move higher this week? Did natural gas move higher this week? And by the way, we did execute on the natural gas trade. We're profitable on that trade, and those options should expire worthless next week. But we were in buying the common shares of Boyle today. Actually, earlier in the week, because I want a little bit of a hedge, because I was worried about a spike up, because the chart's very, very strong. We added more today. So we're probably going to stick with that long trade of natural gas for several different reasons. I'll go to a chart in a moment, but I don't want to get off track. What did the 10-year yield do this week? Continuation rally higher. We're up on yields 1.09%. We closed at a 28.8 handle. The high of the week was like a 28.93 handle. So we're still below 3%. So the markets could still head up higher here, but as we trend up higher towards that 3 handle, it becomes a lot more difficult for technology in particular to move up higher. So what's going to drive the 10-year yield? Simple. Oil. Oil is down on the week, but we're well off the lows of the week. We're down a little over 2%, but we need to appreciate that if you look at this chart, we haven't really broken down below support in several weeks. This is a consolidation. So I would argue that what you need to do here is you need to take a crayon out and draw a support level, and also draw your upper band of resistance, because if this breaks out, there's going to be a problem out there for equities. And here's why I think it's probably going to break out. Oil surges on China reopening. Hopes, as Goldman says, there will be no Iran nuclear deal. So you have probably more sanctions on the Iranians, which really doesn't matter all that much. But the China reopening is huge. We know what it did here for the United States. The United States has 325 million people. You're talking well over 1 billion people there. So China, the reopening of China is going to eclipse the reopening of the United States. Now, natural gas, which has completely retraced and now put in new higher highs. We spoke about this over the weekend. New higher highs versus the prior high back here in June. If oil begins to break out along with natural gas, that CPI report that was very, very muted in relative terms month over month in July is going to look a lot hotter in October when the September's number comes out. August is pretty much in the books right now. Nat gas may not have that much of an influence by itself, but along with oil, you bet your bottom dollar is going to have a huge, huge influence. Now, nat gas prices at 14-year high as traders warn of winter tightening. On Thursday, nat gas futures are up 2% on $9.30 after the EIA reported a smaller than expected injection of domestic reserves, and that's true because I validated. Now, this is what caused me to buy more BOIL, which is a leveraged ETF, putting you long of natural gas, because I sold calls, but I sold puts as well as a strangle. But if I got a shot up higher on price, I could get hurt. So I needed to protect that position. So I took a look at the EIA report, and all you need to do is take a look at this chart here. And this chart here is the lower 48 current capacity and the 5-year average. We are back here. You could see that we were well above the 5-year average. That's when natural gas was in a bear market. Prices kept collapsing. That's all changed now. You have inventories well below the 5-year moving average. That's a problem. So to add to that, in gray, this is like a kabuki cloud, or what do they call them? Those Ichibuki clouds, where you have the upper band of the range, the lower band of the range. We're probing the lower band of the inventory range for the lower 48 of the United States. That's a problem. So prices are going up. And when you take a look at where that natural gas is going to be going, it's going over to Europe. Europe is in big, big trouble. Yeah, they're opening up nuclear power plants, coal-fired plants, converting natural gas to oil. They're in big trouble. So winter is coming for Europe as stagflation and energy crises are set to bite. And when you scroll down, I've been a big, I don't know how you want to put it. I've put out scathing rhetoric with regard to the EU, and how they didn't see this coming is shocking, the arrogance. But in short, oil prices in the US may be declining. Gas prices are not, because we're exporting natural gas over to the EU. Gas prices provides nearly a quarter of European energy. Over 40% of it comes from Russia. Think about it. European gas prices are rocketing higher, a massive crisis for economic activity, where gas prices are an unbelievable 600% up on the year. That's hyperinflation. With no sign they will ease. It's the biggest economic threat to Europe since 1939. We all know what that year was. That was the beginning of World War II. And it only gets worse. I'm not going to read the assumptions that these morons made. It's just not worth our time. All right, economic data going into the week. Empire State Manufacturing Survey, they expected an expansion of the Empire State Manufacturing Index of 5. We came in with a negative 31. But according to our esteemed and venerable President of the United States, there's no inflation. The economy is the strongest in history. Don't worry about it. Don't look at this. Look at Dancing with the Stars. Look at Dancing with the Stars. What else do we have? We had good numbers today come out of initial jobless claims. They came in less worse than expected, but the ongoing trend of continuing jobless claims is still very strong. So the job market is floundering. In terms of the Fed heads this week, Bullard back 75-point basis rate hike. That's going to happen in September if they actually do that. And I think they may. Stick around. I'll tell you why in a moment. Esther George was out, says they've already done a lot. So she's going to be good cop. Bullard's the bad cop. Understand what they're doing here, right? Again, it always goes back to what Bernanke said when he was Fed chair. The job of the Federal Reserve is 75-90% verbal, and the rest is action. So this is the mental gymnastics that they play with the Wall Street crowd. So we don't really play that game because we have the Fed's balance sheet, which we're going to go over in a moment, real time. Fed funds balance sheets belie that July minutes were dovish. I agree to a certain extent, but the markets are still pricing in a peak in yields, and I don't think they're going to get up this high. This is the Fed funds rate. They're expecting a 3.7 handle on the Fed funds rate. I don't see that happening. I just don't see it happening. That means you're going to have the 10-year yield with what? A 4 handle into the midterm elections and the stock market taking a nosedive? I don't think so. All right, so Brian Stelter out at CNN. So this means not much on an individual basis, right? And I'm not going to comment on whether I like him, I don't watch the channel. But clearly, Brian Stelter was a useful idiot. You had Andrew Cuomo's brother, the other Cuomo. Oh, I forget what his name was. It was Cuomo. Chris Cuomo. Chris Cuomo was another useful idiot. He's out. His New York governor brother, useful idiot. He's out. The dominoes, when you take a look at them in a macro perspective, the trend is not going well for the deep state. The deep state is not doing well. They're not happy. Hell, they just raided an ex-president of the United States home. Whether you agree with it, disagree with it, we're not here to talk about that. What we're talking about now is desperation to control a narrative in front of two major elections. One, the midterms, you have the House, and to the lesser extent, the Senate that are up for grabs. Second election, 2024, they will do anything to keep Trump from running because he's going to win. So at this point in time, they will do anything to salvage whatever power they can. You had Biden call, Cheney last night, the Rhino, after she lost her primary run. So the Democrats are losing a lot of pawns in a very, very big game. And you can lose a few pawns, but while moving up to your rooks, and God forbid you lose your queen, the king goes down. So these people see the trend that's happening here. They're losing the narrative, and they will do anything. So what do governments do when they lose the narrative? They go to war. It's as simple as that. And the war is escalating. Russia deploys MiG fighters armed with hypersonic missiles over to Kaliningrad. Somehow or other, we're getting precision strikes into Crimea at Russian depots, ammo depots. So it has the smell of somehow United States involvement. So they're deploying hypersonic weaponry to a theater of action that shouldn't require these types of armaments. They're scaling up. You want more evidence? Russia, China, this is not what I wanted. Oh, yeah, right. It is what I wanted. Russia, China, and India hold massive Vostok war games. You have the Chinese that are now going to be doing drills on Russian territory. So you could see Chinese troops in Western Russia fighting in the Ukraine in support of Russia. That is not good. You also have brewing here, you've had unwarranted visits over to Taiwan. And companies are drawing up contingency plans on a Chinese invasion risk. You have a two-front war that is setting up here, and it just takes a one torpedo to take out a cruiser, and the war is on. So these are my major concerns right now, and all you're seeing is a ratcheting up of tensions. And frankly, it's the United States and the EU that are doing the ratcheting up. So these are the concerns that we have on a holistic view. Now, when you take a look at the Fed's balance sheet, this is going to be a problem for equities, because equities, and I didn't forget about those who joined in for Amat earnings. I'm going to go over Amat earnings in a moment. We're almost done here. Now, the Fed's balance sheet, remember on Sunday night, I showed you the comparison of the S&P 500 peaks and how the Fed's balance sheet peaked on any number of occasions. And when the stock market began to bottom out, consolidate, so did the Fed's balance sheet. So the Federal Reserve is the tail that wags the stock market dog. So what you're seeing here is now a serious roll-off of debt off the Fed's balance sheet. When I say serious, I'm not talking about in dollar terms. What I'm talking about is in terms of the trajectory, right? If you're bullish, you want the chart to go from the lower left to the upper right. Well, back here, you got that. Check. Good stuff. Stock market followed suit. Now they're removing liquidity from the market. So you had a flattening out, and now you have a clear and defined series of lower highs and now lower lows. So if the Fed's balance sheet was what caused this bull market in equities, well, it stands to reason that a rolling off of the debt of the Fed's balance sheet is going to have an adverse impact. So this is why we keep hearkening back to the Federal Reserve. What are they doing? This is what they're doing. Albeit very, very small, it's enough. It's enough for players on Wall Street, guys like us, taking a look at these numbers and saying, okay, we appreciate how the stock market went higher. It wasn't economic growth. It was the Federal Reserve causing economic growth through stimulus. Now that they're taking it away, what's going to cause that stimulus? What? The Inflation Reduction Act, which just put 87,000, an army of IRS agents that are going to be on the hunt for you, not the billionaires, you, me. You got a small business, they're coming for you, and they're armed. Let's stick with this for a moment. I want to talk about Apple. So we shorted Apple. For those folks not familiar with what shorting is, it's taking a negative position in a stock. Basically, you're making a bet. It's a play that the stock is going to go down. Now, why would I ever short the most wonderful company on the face of the earth, Apple? Well, here's why. Apple bottomed out back here the week of June the 13th. And since that point in time, we have rallied 35%. Think about it. There has not been a one down tick week since the week of July the 5th. You go to a daily chart. The daily chart tapped the upper band of resistance here. I saw it start coming off of that resistance level, and we started buying what you call a bear put spread. What does that mean? It means that I bought a deep in the money. I forget what the strike was. A deep in the money 70 delta put out, and then to finance the trade, I sold a deep out of the money put option. So basically, it puts us synthetically short of Apple. They expire in January. I don't expect to be in this trade all that long. It's a speculative bet that we're going to get a pullback. We already have the pullback. We're slightly down on it, but the options were so cheap I couldn't resist. So we're looking for a continuation pullback here on Apple, an expansion of the implied volatility of the option. We'll book our profits. We move to the sideline. We find another victim to stalk. So you can see that on the daily chart here, everything's rolling over. Stochastics rolling over, RSI putting in lower highs. We backed off of resistance. Volume was light today to the downside. ADX, we're probably going to pop up higher tomorrow, creating a double top on ADX green, MACD losing momentum. So Apple is not looking wonderful. Again, I'm not expecting a crash here. I'm looking for a pullback, 5%. It makes us a ton of money. So we'll be satisfied with that 5% pullback in Apple. We're short of Tesla. We're short of the Qs, but these are all hedges. We still have other positions out there that we're using these hedges to protect our overall portfolio from a big black swan event. So that's the name of the game. And Apple is also it's expensive relative to where we've traded. We're at a PE of 28.7. I hate that. 28.7. We're at a high that not seen since last April. So on a relative basis, Apple's expensive. And when you take a look, this is TrendSpider 35% discount code. They promote the show. When you take a look at seasonality on Apple going back 16 years, Apple is up usually 71% of the time in the month of August. You may be saying, what the heck are you doing up 71% in the month of August? What are you doing? What are you shorting now for? Well, it's simple. Because we timed it right. We bought at what I believe to be the peak. And now we could trade sideways. We could still close up on the month, but we could still have hit a peak already. Now, the problem for Apple, that is bad for Apple longs, but good for us, is that the month of September is the worst month out of the year, up only 43% of the times. So you have a stock that's rallied 35% since the lows of June. And you have seasonality, which is going to kick in fairly soon, quite possible. It's not definite, but it's quite possible. And therein lies the trade. That is why we shorted Apple. Cheap options, extended stock, seasonality, and valuation. Simple as that. Okay. All right. Let's talk about Amat earnings. All right. So Amat came out. I was gonna do a trade here. I said no. Keep in mind that what we do here is that I take undefined risk because I need to make a market for option buyers. Option buyers, it may seem risky when you buy options. It's technically not, because you perfectly know exactly how much money you could maximum lose. In terms of what we do, our probabilities of making money consistently are very, very high. That's the way we structure it. The problem is that when you're wrong, you can be wrong pretty big, and I have to finance being wrong. So I need to get paid a good premium for accepting that risk. Much like if you're not going to charge the same rate of insurance for a bad driver as you are for a good driver. Simple as that. So I priced out the options here. The options were very inexpensive. I did put it in order at what I was willing to accept. And I went back, I didn't get filled. I checked back later on. The options, rather than expanding in value as they normally would, as the earnings report nears, they were declining in value. I just said, cancel it out. We didn't get involved. This would have been a profitable trade, but it's simply not worth the risk. It's bad behavior if you're willing to get underpaid for too much risk. It could have been easy money for me. This would have been profitable, but you got to have your discipline. So without that discipline, you're not consistent, you become reckless, and that's not a good thing. So Amat, good earnings, forward-looking guidance, very positive. And the other reason why I didn't get involved with this trade is that the chart of Amat, it's clearly a chart of a stock that wants to go up. And I wasn't getting paid enough risk to put out a call side option. If you take a look at a weekly chart here, Amat's had a nice run. It's consolidating. But when you take a look at a daily chart, it wants to break out. I could feel it. Here's your upper band of resistance, lower band of support. This is going to get resolved one way or the other, probably tomorrow. And in all probability, given the good news, it's going to get resolved to the upside. So it's best to get paid a good premium if you're going to accept that reward. We weren't getting paid that premium, therefore we walked away. Now, that being said, AMAT breaks out here. Options are cheap. You could trade, you could buy the options very cheap or just simply buy the stock. So that's AMAT. How much time do we have here? 6:40. Let's do a couple of charts for the weekly time frame, and then I want to spend some time going over your symbols. Yields we already did. I want you to pay attention to the tip market. Treasury inflation protected securities. Yields are rising, right? But so are the tips. So what I read into that is that when you had yields rising back here, you had tips that were dropping off. For those not familiar, tips are an inflation hedge, Treasury inflation protected securities. Now, if the markets believe that the Federal Reserve is aggressive and rates are going higher, well, they're going to sell tips because they're going to consider inflation a thing of the past. What you're seeing here now is that people are buying tips. And in fact, you had yields up today. And the tips broke out. They were up a half percentage point. So that's kind of a tell. As for the US dollar, this has really hurt our precious metal trades this week. The US dollar, very, very strong here. One trading day left to go, but it would take a lot for this breakout to fail. So the dollar pressing up higher, hammering. It's on very, very good volume. So it's hammering the precious metal trade. We sold covered calls on NUGT. Those will expire worthless. We'll look to sell more going out into the following week. We'll just continue to generate cash flow off of that trade. The VIX market, weekly chart, up week, but a fade, hardly an awe-inspiring chart. Let's go to the daily view. Daily view, again, not awe-inspiring. The thing I want to bring to your attention is that we're in a trading range, right? So we haven't seen a clean breakdown. We continue to trade down with a 19 handle. That's definitely a trend. So this is right now technically bullish for stocks, not bearish. Dow Transports down on the week. We kind of expected that. We got that. Dow Jones Industrial Average up on the week. S&P 500 up on the week, but faded off the highs of the week on very, very light volume, folks. Volume matters. So how we interpret this is that while, yeah, you have the S&P 500, which has rallied now off of its lows from the week of June the 13th, from a low to a high of over 20%, with not even a pullback. So a pullback is going to happen here very, very soon. So that's why we didn't go short of the S&P 500. The Qs are more vulnerable due to their tech exposure. So we shorted the Qs. We added more yesterday to this position. You can see the Qs are down on the week. They're susceptible to the higher yields. So notice how the S&P 500 shrugged off the rising yields. Why? You got banks, you have industrials, cyclical names doing well, whereas the tech names are a little bit wonky, and they're down on the week. So we added more to that week. They're at resistance, but they're helping goose up the S&P 500. Technology, oddly enough, Qs are down, technology up. Strange. Semis leading the charge to the downside. However, they rallied off the lows of the week. This is one of our top picks going into the new trading week as a long. We didn't execute on any trade because we haven't broken out. We'll see how we close out the day tomorrow. Let's check out the daily chart here. See if this is still a trade we want to be involved with. I still like the weekly chart. Not loving the Stokes. Not loving volume. Jury's out. Biotechs, they took a nap this week. They're down in the week. They're not out, but they're down. Energy, big breakout here, folks. So understand here, I have the correlation here in black. XLE, the energy ETF, versus oil. How correlated are they? They're very correlated. At current, they are 66% correlated, meaning 66% of the time, energy, oil trades up, energy stocks trade up. It was much higher. It was nearly 100 at one point. So I think this is going to resume yet again because oil prices are bottoming. Oil stocks are breaking out. This is inflationary. Worry about the September CPI. It comes out in October. That's why we're positioned with a hedge. Consumer staples, big week this week, but remember, these are defensive plays. Discretionary, not such a great week. Failed breakout. This is more discretionary. Lots of credit card debt out there. What are they buying? They're buying groceries. Bitcoin. Bearish reversal bar. I think this is going to break. I am not bullish on Bitcoin at all. I think this is going to break. You have a bear flag set up here. You have a market that is run up with a greater than, let's talk to Qs, about 25% it's run up. If they start rolling over here, we know for a fact that Bitcoin is highly correlated to equities. They're going to roll over along with it. Emerging markets, strong US dollar, weak emerging markets. Avoid emerging markets right now until the dollar breaks. West Texas Intermediate crude, we did already. Gold. Actually, gasoline. No, we did not do that one yet. Gasoline. We have stopped going down here. We are consolidating. We should expect a counter trend rally to the upside. Gold. We're going to do a retest of 1750. I don't even want to talk about gold right now. I'm very, very upset with it. That's why we're selling covered calls on our gold trade. All right, so that's not working for us right now. The calls are working for us, not the underlying. All right. Oh, SQQQ. SQQQ. I believe that is Pro Shares. All right, so this is the chart I wanted to share. This is basically a 4-hour chart. Now, I spoke about this last night with members, and we broke out. So this downtrend may be over. The triple Qs. The SQQQ is a leveraged ETF putting you short of the Qs. I own it. If we continue up higher here, we're probably going to be adding more to that position. So it's a bet against the Qs and a pullback. I'm not saying a crash. I'm just saying an orderly correction. If it leads to more than that, so be it. So Seymour, thanks for reminding me about the SQQQ. Yeah, I think I didn't send out the invite, but Franklin has the notifications on, and he's traveling this week. So I think that's why he's not on. Thoughts on LABU dip? Any support at 10? Yes, support at 10. If the XBI is the underlying for the LABU, yes, I would focus more on XBI because you have time decay on the LABU. So yes, to answer your question. That being said, I think 10 is going to be psychological support level for traders who generally buy the LABU. We booked profits on 3/4 of our position last week on the LABU. I'm willing to buy it back, but the setup's not there right now. Maybe a 10, but it's got to overshoot to the downside, probably a 9 handle, then close back above a 10 handle. The VIX looks like it's due to go up. It's been up and so on consistently for up and down consistently for, yeah, sure. If you like Bob and find me annoying, if you like Bob and find me annoying, please hit thumbs up. Yes, thank you. Litecoin on OTC's. Be careful of those grayscale trusts. They have a lot of fees, lots of fees. That's how they're able to afford all those commercials on CNBC. Like and subscribe to the Contrarian Trader. Yeah, thank you very much. All right, let's do some chart requests. Yoga Mac, I know you had a couple out there, and then we'll shut it down for the evening. All right, again, folks, we're going to be using TrendSpider automated technical analysis. Link below, 35% discount code. Let's get to it. We did SQQQ. Oh, you wanted the Dixie versus Bitcoin versus SPY. Dixie's going to hurt the SPY. Here, I don't need a chart for this. Dixie's going to hurt the SPY. Why? Exports become more expensive. So those cyclicals that you've seen do pretty well, they're going to get hurt. It's also going to hurt the Qs, which I didn't realize was such a big thing until Microsoft reported earnings last quarter or this quarter. The currency conversion adversely impacted their institutional sales. Bitcoin's going to trade down or up, whichever way risk assets go. Husa, Devin, Husa. I don't know this name. So let's get familiarized with it first. There's not a ton of data here. In fact, it's done nothing for a very, very long time. That being said, it's breaking out. So here's the value of the automated trend lines. I've never looked at this stock before in my life. This is the algorithm. Support below. We hit it back here in February, rallied off of it. We're in a consolidation raise. You raise resistance level here, where I would set an alert, or I'm going to set an alert. You're putting in higher lows. I'm going to share this chart with you so you have it. Okay. So the monthly chart bullish. And remember, oh, this is beautiful. The weekly chart, this is a buy. This stock could be bought. You have a major breakout here and a retest. One of my favorite setups. So let me explain for those not familiar. We broke out here the week of the 25th. How do I know that? Automated trend lines, folks. Let the computer do the work for you. Broke out, retest one. Not only did it retest one breakout point, it retested two. And now this week we have a continuation breakout. It's faded off the highs of the week. Let's go to the daily chart. Slightly. A little bit of overhead supply. I still think you can nibble on this trade. Add more on a breakout above where I set that alert on a monthly time frame. RSI and Stokes, which are your momentum indicators, they're gaining momentum. So this is a stock that can be bought. Buy it on accumulation. Right now, it's broken out. It's done a retest weekly time frame. Check the box. It can be bought. When is it eligible to be bought? Again, when you could build your position when it breaks out above a monthly time frame. You actually want to pay more because higher prices only validate that you were right the first time. So you're averaging your basis cost. And I don't know if this is optionable. I doubt it is. It's a $3 stock, so it's not $4 stock. So it could be optionable, but it's illiquid. I wouldn't trade any options on this. Raul Paul also said most investors are underweight. What a concept and heavy cash. Yeah, Raul Paul, I'm very surprised. He's very, very overweight at crypto. Like overweight, like the ex MicroStrategy's CEO. What's his name? I forget his name. I'm already hearing that if the next earnings will be okay, not as drastic across most sectors, especially tech, and rates trickle down, then we'll be out of a bear market. Even Raul Paul said that. I think Raul Paul is He's hoping when he should. Thank you, Michael Sell. Thanks, Yoga Mac. I think he's hoping when he should fear. Really, I think he's hoping when he should fear. I like Raul Paul, but I don't agree with him all the time. Thank you, Yoga Mac. Thank you, Mr. Talon. I didn't check the members area here. Did anybody request anything before I get? Alto, I do. SM for Jeff. Thank God I checked. SM. Another energy company. I can already tell you the daily chart is really hot looking here. Monthly chart looking very, very good. We have a new monthly higher high. Always nice to see. You have a price shelf up here. I should say a volume shelf up here, where if we close out the month above 41.71, that's a very bullish event. So mark that on your calendar, 41.71. If that's the price or higher at the end of business, at the end of the month, this stock is going a lot higher. Weekly chart, big breakout, one trading day left to go. We're trading above resistance. Expect next week a retest of 41.91. I would be a buyer. Let's bring this down to 45 minutes. We're good. So our alert is set. I'll share this out with you. And there you go. So monthly chart check, weekly chart check, daily chart. It's looking awesome. It's going higher. This is going up. You know, I would be okay if you wanted to nibble here, add more on a retest. It's going up. Stock's going up. So SM, very, very bullish on. Alto. All right, so this one a little bit more cautionary. The daily chart looked good, but we always want to do a top-down approach, looking at monthly charts, weekly charts, then daily charts. We use the daily chart as our timing mechanism. So you had a breakdown here on Alto back here in April, pretty much when everything else went to hell in the handbasket. We have bottomed out. We are now proceeding up higher. It looks good. The problem is this, is that what was resistance back here in March and then again in April is still going to be resistance. So I would not buy it here. I would buy, unless you're going to swing trade this or day trade it up and into resistance, I would set up an alert letting you know when to get out. If we rally up and through and close above, let's call it $6 a share to round it up, then I would be far more optimistic about Alto. The weekly chart looks good. We're going to make a run. Again, this is that monthly resistance level. I think that we're going to charge this resistance level. The probability of us getting through it on the first run is improbable. So if you bought it now, what I would do is I would set the alert up. When it fires off, me personally, I would dump. Look for a retrace because you're in a wedge formation. You're going to go backing, filling, and then look to re-enter yet again at the lower band of this trading range. That's the play here. If you're going to make a play, if you're looking for it as an investment, scratch now, buy more on the breakout, monthly breakout. When I say scratch now, I mean buy a few shares, scratch the itch, get it out of the way, you're in, and that way you're not staring at your computer screen all day long. Daily chart, nice move up higher, but this is what I like to call a Nemo chart. What's a Nemo chart? Remember the movie Nemo? I know this because I had little kids. When my kids were little, I went to take them to see Nemo. And Nemo wasn't allowed. The little fish weren't allowed to swim in the middle of the ocean. They had to stay by the coral reef, right? Because else the sharks would get them, or the barracuda. So right now, here's your coral reef down here. It was protected. It was closed. You knew exactly where to set your stop loss order. Right now, you're kind of like in the middle of a trading range. You got resistance up here, which marks the surface. This is great analogy stuff I'm giving you folks. Family-friendly show. You should have your kids watch. And down here, you have the coral reef. You're in the middle of you're in no man's land. I don't like putting on trades in that type of environment. I like definitiveness. Either we break out and close above resistance, or I buy on a breakout like you saw yesterday above resistance. So that was a shot here. I would not buy it here. If you're going to do it, stay small and wait for the breakout. All right, folks, I think that's pretty much it for the seating. 7:01 Eastern Standard Time. We've got a full hour already. Always a blast. Always a great time. For Josh, thank you, Gringo. You're very welcome, Seymour. Thanks, Jeff. Oh, good, Jeff. You're on. Good that you're on. All right, guys. Thank you for being here. My pleasure, my honor. Smash the like button, tell a friend, and I will talk to you all tomorrow. Have a profitable trading day and an awesome weekend. Be well.